Bitcoin has seen a brutal rejection from 25,200, the upper resistance of the major trigger zone. Where is Bitcoin going next? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're having a fantastic day today. We're going to be discussing Bitcoin today in a lot of detail. We have so much to cover, guys. A lot has happened in the last 24 hours. We've seen a significant rally to retest 25,200, which was that major final trigger zone we had to break above to see that macro uptrend develop. But we have seen a strong rejection from this point, resulting in Bitcoin dropping back below $24,000. This point was not only a major horizontal trigger, as you can see in this chart over here, represented by a significant drop off in the VRPV right above it, signifying the price action entering a lower resistance range, allowing an aggressive uptrend to develop above, but it was also the major 200 moving average resistance on the weekly chart, which we have now rejected from. If you recall back to our prior videos, we had two levels we need to break above. 24,300, which was now that 50 EMA on the monthly chart represented by that red line, as well as the 200 moving average, which was 25,200 to 25,000 on that weekly chart, which we also need to break above. Both of these things happening would result in Bitcoin, from a technical standpoint, initiate a macro uptrend. At the moment, we have rejected from that point, which is big news. We're going to discuss everything today, talking about what we expect next and so much more. So before we get into it, smash the like button, hit the comment button, subscribe to the channel where you can find all of our information down in the Telegram channel. Second link, updates, videos, charts, analysis, news events, educational posts, and all of our videos in here too. If you're interested in joining our trading channel, you can join our VIP channel. All the membership details and information on our prior trades are posted in here. You can see massive profits. Every single trade comes with exact entries, exact stop losses, exact targets. Everything is set out for you guys to easily follow along with that. We have a group chat where we do daily scalps and so much more. So go ahead and inquire. Let's get into the video today, starting off with the market data, guys. And again, it's been a volatile last few days. So let's take a look. Feb is now up 3% for the month. Yesterday, we're up around 6.6. We went to around 7.5. We're down a little bit now in the last 24 hours, up to around 3%. Again, a lot of volatility in the last 24 hours. We've seen volumes stay quite high, around 130 billion, which is very impressive considering current market environments. And again, liquidations pushing up to 183 million in the last 24 hours, which is absolutely insane. A lot of people chopped out of the market on those recent moves. Volatility 2.76, still on the rise. And again, as you can see in liquidations, guys, excuse me, a lot of shorts liquidated, a lot of longs liquidated as well. We've seen a lot of volatility there. Again, guys, it has been a brutal time in the markets. We've seen a lot of volatile price action, but these volatile price action bring a lot of opportunities into the market. So keep your eyes open. Let's talk about this. The DXY has bounced from that major support zone, and it looks like it is continuing upwards. Of course, the DXY rising is a bad indication for asset prices, as it does represent a stronger dollar. If the dollar rises, these asset prices in comparison to the dollar become cheaper, so they do generally drop in price. This is an indication that the stock market will continue toward the downside, and Bitcoin could potentially find that this resistance level will be a challenging one to break as it retraces even more. However, it is important to note Bitcoin is secondary correlation towards the DXY. The asset market, should I say, the traditional financial market, is a primary correlator. So therefore, we do see these periods of discrepancies between these asset price moves. We can sometimes see Bitcoin move in the opposite direction of stocks, as there's only a 0.7 degree of correlation, meaning it is not perfectly correlated. Okay, looking at the Dow Jones, the Dow Jones had rejected from that downward trending resistance of the symmetrical triangle formation, pushing throughout midline, which is this local high over here, and it looks like we are continuing to the downside. Again, no major directional move yet has been made on Dow Jones. Looking for a daily candle above here, above this line here, or a daily candle below this line here to trigger a continuation toward the downside or the upside. However, the S&P 500 has officially broken down from a rising channel formation that has been developing now for a little bit over 2 months. Insane stuff to see, very bearish, not looking amazing. However, it is holding on to a major horizontal support, which is sitting right above $4,050. Keep an eye on that, guys. If we do lose this local low sitting around 4,075, we will see a continuation down, potentially taking us to 4,000 over the next few weeks. And again, that will most likely drag Bitcoin down as the DXY gains more and more strength and heads up. Now, there's something more I want to talk about, and that is the PPI data. If you're in the group chat on Telegram, if you're on the free channel, you would know we posted the PPI data in the channel, and as you can see, the PPI data came in well above what was expected, massively above, came to 0.7. That means that the producer price index has risen by 0.7% in the last month. That is a leading indication of what inflation could be, as that represents the cost of materials and goods for producers, and the price increases by producers generally get pushed downwards to consumers. So if PPI increases, it's a good indication CPI could increase. And if CPI continues upwards, this could force the Feds to be a little harsher on those interest rates, or at least delay. And I mean by delay the pivot, which could cause the DXY to rally more, and of course a narrative in the market to shift, and we could see a stronger correction. This is definitely something we have to be aware of, and again, very much aware of going forward, as it will and most likely will shift that market narrative and environment. Let's go ahead and jump into Bitcoin, guys, and then we'll get stuck into it. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. Okay, guys, let's go ahead and jump into the Bitcoin chart and talk about a few things. We're going to cover the macro today, talking about the current resistance levels, what we need to see for Bitcoin to continue upwards, and of course, what will be the trigger for an overall macro reversal toward the downside. We'll also discuss the short term and the technicals to give you guys an update and a little bit of information on where we think the price will be heading in the next 24 hours before our next video. So what is happening with Bitcoin? Bitcoin obviously rejected from the major resistance, which is 25,000 to 25,200. If you recall our videos, we've been talking about 2 particular points of horizontal resistance over the last couple of weeks. And these points are, of course, the $25,000 resistance range and the 24,300 resistance range. Both of these singular resistance levels act as individual triggers for moves. The 24,300 was the trigger for a rally to 25,000, okay? And the break above 25,200 was going to be a macro trigger for the initiation of a macro uptrend. You can see that as we have a massively reduced historical trading volume range here, according to the VRPV, signifying a low resistance range. Generally, when we have positive momentum and volume moving into low resistance ranges after breaking through major horizontal resistances, we generally increase our speed and velocity in price action, and we do generally explode quite fast. However, we have rejected from that level, and therefore that trigger has not yet been activated. Now, these 2 horizontal levels are actually represented by 2 key technical indicators. These 2 technical indicators are the 50 EMA on the monthly and the 200 moving average on the weekly, both of which are larger time frame moving averages. Obviously, the 200 being quite a slow moving average, and the 50 being more of a medium moving average. And these are great indications to predict overall trend, as well as points of which the trend has flipped from downward to upward or from weakness to strength more, however. So the 200 moving average represented by this yellow line on the right hand side of the screen is going to be sitting at 25,000 to 25,200. In fact, we have just aggressively rejected from this point for the first time in Bitcoin's history, and we have seen the price drop below it and see a bit of fluctuations, but this is the first actual significant rally from the downside to the upside and rejection again. This is a weekly chart over here, guys. We're looking for a weekly candle. We have 2 days and 21 hours left to confirm whether or not this rejection is a confirmed rejection or just a small short-term time frame pullback. And again, we'll talk about that in the short-term analysis today. But if we are rejecting from here, this could potentially result in a continuation downwards. Will it take us to new lows? Pretty unlikely, but will it take us down? It is definitely possible. Again, we'll discuss that in a moment. Looking at the 50 EMA, guys, we have again dropped back under the 50 EMA, sitting at 24,300, which again is not a good sign for the short-term trend. As you would know, these medium time frame moving averages, they signify overall shifts in trend a little bit earlier than our more lagging indicators such as the 200 moving average. So the 50 EMA break was a great indication of an overall shift in the macro trend earlier than that 200. Let's go ahead and talk about, guys, the overall macro and discuss some of these momentum indicators and then get into the short-term analysis and talk about what is happening. But I do want to quickly draw your attention to the fact that we are at major resistance now. We are seeing the DXY rise. We are seeing the stock market drop down. We are seeing CPI potentially rising as PPI has just came out more positive. We're also seeing bond yields rise. The chance that Bitcoin does rally past 25,000 is quite unlikely in the current state with the current data we have. It is possible, but if we're going to go ahead and look at Bitcoin as an asset in the financial market, it would be highly unlikely to see that occur while the rest of the markets are falling and while the DXY is pumping. Now, I do want to mention that the DXY and Bitcoin is a secondary correlation. We have the DXY, which is strongly positively correlated towards the stock market, and the stock market is correlated to Bitcoin to a degree of 70%. So it is a secondary correlation, and therefore we do sometimes see discrepancies between the DXY and Bitcoin. We can see the DXY rally as Bitcoin rallies, and we can see the DXY pullback as Bitcoin pulls back. And it does often happen, but again, it is not the common, or at least the exception doesn't prove the rule. So looking at that and understanding that we do have to have a little bit more of a bearish bias when it comes to this resistance, as we have had for the last couple of weeks. We've always said we are in a macro reversal from this wedge. In fact, we bought down here, we bought over here. We're at massive profit on our Bitcoin bags. We saw a massive rally to complete the falling wedge reversal structure, which again was a breakout from this falling wedge structure to retest the local high point of that falling wedge on that first high. We have done that now, we've ticked it off, okay? But this is just a reversal. For a macro uptrend to develop, we do need to start seeing weekly closes above 25,200 to 25,000. Until then, this reversal structure could reject and take us lower. What would take us toward the downside on the larger time frame? What would be the confirmation that Bitcoin is going lower? From a 3-day chart, from a daily chart, we need to see a break below the prior low, which is going to be 21,500. At the moment, we are very much down, okay? There's no doubt about it, we've rejected, we are down. We'll talk about it in the short term. The bearish bias is stronger right now. For us to see an overall trend break, we need to see a drop below 21,500. You have to be able to differentiate short-term trend and larger time frame trend. The current daily 3-day chart is very much upwards. We're in an uptrend, okay? That larger time frame break, that larger time frame trend breaks toward the downside when we lose 21,500. The short term can be very bearish, while the macro or the larger time frame can be very bullish. You have to understand there is differences between the two, okay? Now, let's take a look at that short term. So, let's go ahead and drop it down to a 30-minute chart. We can see we had an aggressive rally to retest 25,200. Whilst we were moving upwards, we had falling momentum. So that was a good indication we were dropping. We had decreasing momentum, again, weakening momentum, rising price. We had bearish divergences. Currently on the hourly chart, we can see Bitcoin is just retesting the 50 EMA right now. This is going to be a possible bounce point. The 50 EMA is definitely a possible bounce point for Bitcoin. Again, it could rally back upwards and retest any of these highs, but it looks like if we go ahead and zoom out, we can see that momentum is definitely dropping off over here. Again, not something we're looking at with too much confidence considering the overall market environment. When it comes to short-term analysis, after we see massive surges in volatility, it does kind of shift the technicals a little bit and make them quite hard to read as they are lagging to some degree and heavily influenced by prior data. But what we can look at is more trend indicators. So looking at something such as a Gaussian channel on the hourly, we can still see the overall trend on the short term is currently upwards, right? We're above the 50 EMA, we're above the Gaussian channel. However, we are definitely seeing weakness on the hourly chart as we have broken below our smaller time frame moving averages. So we are still in an uptrend over here on the hourly. However, we are definitely starting to see weakness in this uptrend. If that weakness continues through these higher time frames, we could see a pullback. Where are our pullback targets? We are looking at 22,800. We are looking at 22,000, 21,500 as that major support, guys. Okay. For the upside break, again, we are not too concerned. We want to see a weekly candle close above these resistances, above 25,200, above 24,300. Weekly candle closes above those levels are only what we are concerned about. Let's go ahead and do a larger time frame technical analysis. Then we'll get to the smaller time frame technical analysis, and then we'll finish up on that macro chart. So let's go ahead and bring up some of our momentum indicators. Again, take a look at how everything has changed in the last 24 hours and see if we can see some overall shifts. So what we have seen over here on the MACD, we can see that crossover that looked like was occurring has now started to plateau out. It looks like we have seen a little bit of a hiccup on the daily chart over here on that MACD cross, which could signify a small amount of weakness incurring on those smaller time frames. Going to the 12-hour chart, we can see again, we are starting to see lower green volume prints. So this is indicating again, decreasing positive momentum and potential weakness. We are seeing the market cipher B curve slightly toward the downside again as we have the yellow print, which is a money flow, starting to decrease again, signifying weakness in the trend. If we go ahead and start taking this to a smaller time frame, such as a 6-hour, we'll see this on a larger scale. Again, more aggressive decreasing momentum, and a red pivot on the market cipher B, signifying an overall shift from strong positive to weak positive momentum. So on the smaller time frames, the momentum is starting to fall. However, let's go to a larger time frame. Let's go to a 3-day chart. On a 3-day chart, momentum is very much positive. We just saw a strong green candle print. Of course we did, as it is lagging and we just saw massive volatility incoming. Again, if we're looking at technicals for points of continuations or triggers on larger time frames, we are doing it wrong. This is less important than the short term right now. This indicator tells us much less than what a daily, than what a 12-hour, than what a 4-hour tells us about this resistance. Keep in mind, if you're using macro technicals at major points of triggers, you're going to be wrong. These are lagging indicators. Use them to predict strengths of trends, not points of reversal. Use a smaller time frame. I'm only showing you here to show you the discrepancies between what the short term is looking like and what the larger time frame is looking like. So if you don't know how to apply significance to the short term and when to, and you don't know how to apply significance to the macro and when to, you can confuse yourself on the overall strength or direction of the trend, and you could be looking to buy at resistance instead of getting out at resistance. So that is what we're looking like over here, guys. Let's go ahead and jump into the larger time frame. Again, we have seen those rejections from the 200 and the 50 EMA. We are currently retesting the Gaussian channel. And again, we have seen this twice. We have seen a break through the Gaussian channel in, was it April 2019? We saw a clean break right through the Gaussian channel. And then we saw a situation in 2015 where we tapped that Gaussian channel and got heavily rejected from the Gaussian channel, only to come back down, create a local low, and then retest and break through a Gaussian channel finally. Generally, when we actually break through the Gaussian channel, we usually continue through the Gaussian channel toward the upside. It signifies overall trend. So look at the Gaussian channel in blocks. This block here, is weakness, okay? This block here is strength. That is generally how you do it. When a Gaussian channel is red, weakness. When it's green, strength. Then you can go a step further and look at shifts. When does the price action shift from weakness to strength? It is when we break into the Gaussian channel from the downside. So we have overall weakness, we have a break into the Gaussian channel. This signifies strength, okay? We have strength, we have a break into the Gaussian channel. This signifies weakness, so we can break it into smaller time frames. So generally, if we go to a smaller time frame, we see a break into, we go to 3-day chart, into the Gaussian channel. We usually do see that continuation throughout, such as over here, a break into the Gaussian channel, we see it throughout. Break into the Gaussian channel, we see it go throughout. Again over here, we break into the Gaussian channel, we see it go throughout. And again over here, break into the Gaussian channel, we see it go throughout. So looking at the Gaussian channel on the weekly charts, a great indication of what could happen. Again, potentially retest it. However, on the 3-day chart, we are currently bouncing on that Gaussian channel on the upside. However, we have not printed a red channel, a green channel yet. So again, we are not technically in that positive uptrend yet on the larger time frame. It will be printed if Bitcoin can break into the Gaussian channel here over 25,200. So it lines up as another point of major resistance. Again, adding to the significance of that current resistance range. Let's look at a few more indicators before we wrap up the video. So moving on to, we'll go to the Ichimoku cloud. We can see Ichimoku cloud again. We are underneath our clouds, signifying weakness, nothing too amazing. Again, the larger time frame isn't really what the Ichimoku cloud is designed for. Let's go down to a smaller time frame. We have pushed through the clouds, which is great to see. However, guys, this is not a macro uptrend yet, as the lagging span is still within the clouds. We need to see the lagging span push through the clouds to start to see overall strength occur. Again, indications of macro uptrend has started. We've had the clouds print green with the price action, the baseline, and the conversion line push through, but we do not have a final point of confirmation. That is similar to where the market is at the moment. That's a similar narrative. The narrative is we're in a massive uptrend, but we have come to a point on which is major resistance. This point of major resistance is going to be the trigger for a continuation upwards. It's going to be the determining point for whether or not this uptrend we developed out of this bear market is going to turn into a macro uptrend, or is it just a bear market rally? This is the real question right now. And the answer to that question is sitting right in front of us. It's sitting right in front of our faces. And that is, the answer is above 25,200. If we break a weekly candle above that, there it is. The question's answered. We're in a macro uptrend. Until we do that, we are not in a macro uptrend. We just simply aren't. Okay, according to the technicals, according to the horizontal ranges, we are not quite yet. And that doesn't mean I'm bearish. Of course I'm not bearish. I'm very, very bullish. I've been bullish. I bought the bottom. I've ridden all the way up. I've taken short-term swings, long shorts. I made heaps of money over here. Our group chat is absolutely printing. But we are objective and we are realistic on analysis. We know that major resistance is major resistance until it is not. That being said, guys, I'll leave the video there. I hope you enjoyed, and I'll see you guys tomorrow. Keep your eyes on that stuff. Look forward to the CPI. Look forward to it, guys. If PPI came out higher, this could be very, very bad. That being said, go ahead and join the Crypto Academy course. Go ahead and contact us via email. We'll send you all the information, market structures, market patterns, guys. We'll teach you everything: technical indicators, risk management, risk assessment, market psychology, how to trade, how to look for trades, and how to analyze charts yourself. All of it's in there. We'll see you guys in the next one. Cheers.